Hello everyone. Following today's stock market session, it looks like we pretty much have an official change in trend in the overall general direction of this market. We're going to start off with the New York Stock Exchange, but if you look here, you can see that each time that we attempt to make a high, we fail at lower and lower levels. We've rolled over once already, rolling over twice. It now appears that we're about ready to roll over for the third time. And if you notice this, the volume is really starting to pick up and is consistently above average on the New York Stock Exchange on the sell-offs. I would not consider that a good setup short term, but that is just one index. So if we move over to its brother and look at the S&P 500, we can see a similar situation, but we're tightening up in kind of like this pennant formation here, connecting the highs and connecting the lows. And you can also see once again volume is picking up on the downside as we get ready to retake out the 200-day moving average. So the S&P 500 remains under a neutral condition, but the New York Stock Exchange is still under a sell signal. The Dow Jones Industrial Average is still under a sell signal, and it looks like it's about ready to confirm itself by breaking to new lows. Break below the 728 low a day, or 727 for this index, and the Dow Jones Industrial Average is going to probably break wide open. And confirming today's weakness, the Russell 2000 closed below the 200-day moving average today for the first time since December. The IWM kind of did it a little bit back in July, but you can't count that, especially with the next day reversal. So this is the first time the Russell 2000's closed below this line in almost a year, and it did it on very strong volume today. And the NASDAQ retook out its 50-day moving average, and this time on very heavy volume. So all the other times, I mean, we've always seen volume pick up, and it failed to sell off, but now we're starting to get big clusters of big volume sell-offs, no volume on the rally, big volume sell-off again, no volume on this rally, and now really big volume on the sell-off. So the market's looking extremely weak here, and I believe that we've reached the tipping point now because so many reasons. Everything's lining up. This is August and September, the worst 2 months historically in the stock market going back to 1950, and the third and the first going back to 1929. So that's a huge no-no. Before this market started to sell off, we started to see in earnings reports that companies were recording larger and larger levels of inventory while revenue declined. Key statistic to see whenever a market wants to pull back. So we have the inventory numbers, the declining revenues. We have all the earnings reversals. Anything that pops gets sold off. If it doesn't pop, it gets sold off and crashes. So we have ugly action post earnings. But the stocks are now confirming the macro numbers that we're seeing. And one of the biggest issues is breadth. Breadth has really declined. I don't have the chart up here, but if you go look at our nightly commentary this evening, you can see that we have declining breadth that looks just like 2007 with breadth in the market, how the market holds up near the highs, but less and less stocks participate. This goes to show that there's only a very few handful of stocks that are keeping this whole thing afloat. And that confirms my nightly scans. Ever since this thing started to really get weak, I guess back in late June, as we've moved along each day, there's less and less quote, pretty, hot, beautiful technical patterns out there for me to enjoy. And right now, I can't even think of any off the top of my head. Not one single technical pattern out there. Not one that I can say looks beautiful. This was one of the better looking ones, WNS, and as you can see, this was a new long a couple days ago. I knew I was chasing it, so it was a small position. In fact, the only long signal that I've increased to a 2% gain, a 2% signal, immediately failed. Another huge red flag. But WNS, you can see immediately is pulled back. But WNS is like one of my very few stock charts out there that has max green bot for a significant period of time, clear accumulation, and it still probably isn't going to work. My biggest reasoning why the market's probably in deep trouble is because if you look at this, the overall character, one of those focused on the Russell 2000, you can see in June we were at higher levels, and at each level we're making lower highs. Yet at the same time, the VIX is also making lower highs, which means market participants are becoming more and more complacent as we sell off. They believe less and less that this is going to lead to an actual real decline, and they almost right now, as it seems via the VIX, they perceive it as a buying opportunity. That's a huge, scary red flag when I have stocks breaking down left and right. Breakouts are now fakeouts. Let's go really quickly over all the recent long signals and look at how they've all failed. We haven't had a lot, but they're all failing. PFPT, new long signal yesterday, immediate failure. Like, it didn't even have a chance. INCY was a long signal from 2 days ago. There you go. Another 100% sell signal today. RRGB ripped through 50% of my sell stops. It still has half of it on using the low of day, those July lows, but immediately 50% ripped through. AGN was also a new long signal. Immediate failure. That thing didn't do anything before now failing. So you're starting to see a similar pattern here. Those are all the new long signals, but they're all failing, every single one of them. The only new long signal that I didn't get was CSGS. Maui got me earlier in the week whenever I went short AVXL around 149, and the next day it crashed all the way to 110. I was awake in the morning, everything was going good. There's no way I thought it would go to 110, which was my basically price target. By the time I wake up, things back at 130 by the end of the day. It's back to 150, and then today I'm being fully cut out of it. So, that's one time Maui got me, wasn't able to get out of because of the time zone, wasn't able to get out of AVXL. And then on a mistake this morning, my internal body clock did not wake me up before the market opened, so I did not enter the buy stops because the idea was put a buy stop above 31.23 on this stock. If it was gapping higher than its close, 30.69, as you can see, it opened at 30.99, which means a buy stop would have gone on. This thing would have triggered, and we would have had over a 5% gain in probably one of the best-looking technical patterns out of WNS. But due to Maui, I missed it because my internal clock failed me. So AVXL and CSGS also got me this week, but that's one of the better looking ones. But besides this, everything else that we look at has failed. And look at our recent long signals. HZMP is a full 100% sell. HRTG, thank God for sell stops on that one. Big crash today. MYCC fail, CDK fail, finally rolling over. SWKS, our long-term winner, another one, closing below the 200-day moving average. AGIO, a long-term winner, another one, closing below the 200-day moving average. NBIX, a recent long fail. Tesla, a fail. You could hold it if you want, use today's low a day, but to me that chart pattern is ruined, so it's a full sell on my end. BMRN, ugly fail. EW, another recent long fail. AGN, as I've already posted, fail, but those are all the fails. But as you can see, that's the most that we've had in one day since this trend has gotten choppy. So this is, once again, not a good situation to see. So right now it's a time that you do not force trades. If you do take trades, you keep them small on the long side. Ugly breath, less good looking charts. Fake outs are now breakouts are now fake outs. Macro stocks are now confirming the macro. Everything's looking pretty weak. Sentiment is way too complacent this summer, so it's time to be careful. Now, despite all of that, I actually have a new long signal, but it is in the oil and gas sector, which has had its ass handed to it the past year. It's a defensive sector industry that normally rallies in bear markets, and with a lot of like CVX, maybe that's not it, XOM. No, I am way off. Let's see, do I have any that I actually wrote down? VLO, for instance. So VLO, look at VLO, an oil and gas refining and marketing stock. See how that's coiling? Probably buy stops above the July highs are going to work, but that's another stock that was flagged in the refining marketing sector. It's doing very well short term. But TSO, pocket pivot point signal, breaking out of the base on base pattern on heavy volume. This stock is a CanSlim quality stock that was confirmed in my pre-perfect speculator scan. My high price stocks on over a 500,000 shares average daily volume scan, and my price volume BOP surge scan. So it was confirmed in all the scans, so I can't pass on it. I got to take it. But 1% of my account capital is going into this. Now, with all the selling that's occurring, I only did receive one hedge signal tonight, and it is a bit risky, but I'm still taking it. BIS is giving a pocket pivot point signal off its lows. It's up 8.34% in one day, which means, yes, 5% of my capital is going to be at risk of at least 10%. I can handle that as I'm still extremely long, and that means if this thing rises, my long positions are going to fall. If this thing falls, my long positions are going to do good, and instead of making money on the long side, they'll be canceling each other out. But then with that being the case, stocks should continue to rise, and BIS will just be a hedge that fails. But for now, I have a 5% position in TECS. It's plausible that you can set buy stops just above these recent highs and get long more. I'm going to wait, but I got 5% in that one. I got 5% in SRTY, and now I'm going to have 5% in the ultra short NASDAQ. And somebody in the chat room today was like, isn't 5% a small number for a hedge? Not when these are 3 times ETFs, 3 times buying power. So even though I'll be 15% short, technically it'll be like being 45% of an account short without margin. So I'm pretty heavily hedged here with the long positions and the cash that's rising. But overall, things are not looking good. It's August and September, and with all of these breakouts and new long signals failing on our end now, which haven't been many, which is another good news, this is why that you got to be very disciplined. I mean, we could have easily taken a lot more different signals that I flagged for long positions lately, but we did not because the market's just weak. But now, if the market does continue to sell off into August, September, you can be sure less and less stocks are going to pass the scan, and we're not going to be able to increase size in any new long position until we see a follow-through day. And remember, hopefully we get a huge, huge, huge sell-off, a more than 20% correction, which probably won't happen, but it's what I'm hoping for. And then maybe we can find some new long positions where we can start putting 5, 10, 15, 20% of our account capital into one single position. That sure would be nice.